Hello, ladies and gentlemen, all friends. Hopefully you guys can see us okay. My name is Tony, and here's my colleague.
I'm Alice.
So today, as part of our trading marathon, we'll have another quick webinar, talk about a little bit about trading strategies and planning and how it all works. Let's just wait for probably a couple more minutes to see if everyone can see us and hear us okay. Any comments, please go ahead and write them. Are we all good? Anyone? Hello? Yeah, all good. All right, let me just quickly check it here. Oh, okay. You can see some people joining. Hello, Effendi. All good? Can you hear us? Can you see us? Oh, Mike Sweet Love. Hello. Hello. Okay. Yay, you can hear us. That's awesome. All right, cool. So let's start with, well, first of all, it's, as I mentioned in the beginning, it's one of the videos that we actually do in terms of this trading marathon, which is actually happening right now. Well, it's actually starting. It's going to be absolutely massive. We'll have some other videos later on. Also, for any one of you guys who missed the previous videos, they are all on our YouTube channel, so feel free and you can watch them all there. So just to quickly start off, so this trading marathon basically goes in terms of the LH Crypto project, which we're actually here to present today. Cool. So what do you want to start off with?
We have several subjects to discuss today. These are trading plan, trading strategies, MetaTrader using, main enemies and mistakes and how to avoid them, and questions and answers. So let's start with trading plan. What is this and why we need it? So trading plan is a complex of rules and techniques which a trader uses while trading. So after he has got a trading plan, he knows exactly what steps he is going to do further. He knows that beforehand, so he does not use his emotions while trading. So he just strictly following the plan, as easy as that. So trading plan. Before making a trading plan or while making trading plan, you should answer yourself several questions. First of them, why did I decide to trade? Different people have different reasons. For example, somebody wants to save money to buy something, a car, Lamborghini, for example. Another one wants to trade and save money for his pension or for education of his children. Someone wants just to get some additional pocket money. So reasons are different, and you should answer honestly yourself why you need it. Next question is at which markets you are going to trade. So there are various markets and various of assets on these markets. You should choose for yourself which one is more comfortable for your understanding, which one you feel more comfortable to deal with. It might be crypto, it might be metals, gold and silver and platinum, it might be just fiat pairs like euro, dollar and yen, or it might be a mixture of all of them, but you should understand which you are most comfortable with. Next question is what time frames you are going to trade on. It can be intraday trading when you open and close your a transaction within 1 day or even several hours and get profit, big or little, it doesn't matter, but you get your money and sleep quietly. Or it might be middle term or long term frames. So you choose for yourself. There are options. You can see different patterns. You can choose for yourself 1 week pattern, 1 month pattern, 1 hour pattern, and choose for yourself and decide what is more comfortable for you. And it also depends on which market you are going to trade on. The time frame depends on which market you are going to trade on. For example, in cryptocurrencies, you can open and close transaction within 1 hour, and with some other assets it will be longer, for example. So another question: which sum of your capital, which percentage of your whole capital you are going to trade with? Here it's important to say that it's highly recommended to start with not more than 5 or at least 10% of your whole capital. Better even not more than 5%, because especially if you are a newcomer to this business, you just to try yourself, to test yourself, because in case of negative result, you can lose. The more you invest, the more you lose. But in case of profit, the more you invest, the more you gain. But at the beginning, don't risk more than 5 or 10% of your whole belongings, let's say. So next question is also a very important one. Which sum can I afford to lose? You ask yourself this question not because you are going to lose. We ask this question to find your emotional balance point. For example, if you lose $1,000, it's okay, you sleep quietly. But if you lose $50,000, that means that you have nothing to live on. And by the way, you should never invest money or trade with money you are living on. It should be free money, which can be frozen, which can be lost, which can be kept longer than you expected. So it must be money when you don't wake up in the middle of the night and think what happened to my money. It must be such a sum which you are comfortable to lose. But not to lose, of course we are going to earn. But this is one of the most important questions. So don't forget it. And another question, what is preferable risk-profit ratio of your portfolio? So you know that the higher risk is the higher profit expectation. The lower risk, the lower profit expectation, but at the same time it also depends on your emotional balance. If it is if you have very risky portfolio and you don't sleep quietly, then no point in such a portfolio. Then make it with lower risk, but keep your mind quiet. This is the most important thing, and really one of the most important things of trading is to stay quiet. So think good about this risk and profit ratio. And the last thing, what you should do, which is recommended to do, it is to keep a diary of a trader. So you can write out there your notices, your thoughts, your suggestion, your predictions, let's say, because after a while you can forget of something. But if you wrote it, you can always return to it and remember what you were going to do, what you were thinking, how you were feeling. So diary is an important thing. Don't neglect it either. And so trading plan is about that. And this is about the whole market, about the whole, let's say, the whole situation. After you made a trading plan, you should make a trading strategy for each particular market you decided to trade on.
Cool. I'm going to take over at this point and let's talk a little bit about trading strategies. Obviously, once you guys have the trading plan, so you know what and how you will be doing, it's important to actually execute it. So this is when the trading strategy actually comes in. So one of the things you guys need to understand is when you guys are choosing a trading strategy, there are millions of them on the internet. There are millions of different tutorials and webinars, etc., etc. A whole lot of literature written on that. One of the probably most important ones, and obviously it's one of the most popular ones, is obviously trading using different levels. Yeah. So what we're talking about is resistance and support levels. I'm pretty sure some of you have already heard about it, and probably for the most part, for those of you who haven't actually learned them yet, you guys have noticed that there are a few say patterns that keep happening over and over again on the market, and this is exactly what resistance and support levels are. So in short, what that means is if you see the price bouncing off a certain level every time it approaches this level, this is basically a support or a resistance level. So the whole definition of a resistance level is a price level which basically does not allow the price to go further up, so like further upward. And the support is the exact opposite, so basically keeps the price from sinking all the way to the bottom. So it basically stops at some certain level and then it bounces back up. So let's actually have a look a little bit closer on how it actually works. So if we were to have a look at some examples, so say, okay, we're looking at Bitcoin right now. So one of the important things you guys can obviously notice, there is about this level here, and I'll actually make it a little more visible for you. So obviously this is the level where you can see the price bounce off 1, 2 times, and then here you can probably count that as well, and this bit again, and this bit again, and this bit again. So every time you guys see the price of Bitcoin approach the price of, what is it, roughly $6,500 US, you can actually see the price going back down. So again, what would you expect this time? You'd probably expect something like this to happen. Again, don't take my word for granted. This is just a quick example. This is not a prediction for Bitcoin. We'll actually get back to that starting on Monday. So in just 2 days' time, you guys will hear some of our predictions on how we're actually going to trade. So obviously, it can be something like this, like that, but in the end, you guys get the idea. So this is obviously a resistance level, so because it keeps the price from going all the way up. And again, you can see, say, this level here. Let me just quickly duplicate it, where you guys would see the price stopping once and twice, and then again, if it goes down all the way here, you would expect that this price would actually limit, this level would actually limit the price from plummeting all the way down. So this is basically what a support line is. Again, for your own convenience, you can do them in different colors. It doesn't really matter. One of the important things to mention about trading using different levels is that there is no strict definition of how you have to place them. So it can be on top of the candlesticks, it can be on top of the noise, so it can be all the way up here. Some would actually place a little lower. So again, this is not a mistake. This is something, it does depend on the perception of a trader. So don't be afraid that you see someone using the same graph and get it a little higher or lower. In the end, it should be about the same, but it's not critical. Another really big thing that I would like to point out, you need to understand, when Alice mentioned different time frames, it's very important for you guys to understand different time frames have different importance when it actually comes to trading. Obviously, if we think in terms of daily charts, this is very, very big. And again, as you guys can see on this one, the bottom part that I mentioned here, it's actually, it also corresponds with the daily chart, which basically means that this support level is very, very hard for the price to actually break through. What that basically means is, in terms of the long-term trading, maybe, okay, it's something where the price would most likely stop. In terms of, some weaker time frames, say if we go to, go back to, again, 1 hour, say this one, it's actually a lot easier for the price to break through. So one of the first things you need to understand, you start your analysis with the higher time frame. With some of the instruments, you can go as high as a monthly chart. You can go as high as a weekly chart, daily, etc., etc. So that's obviously one of the things to point out. Also, you guys need to understand that every single resistance or support line gets broken through at some point. So don't think about them in terms of being completely sort of invincible. If you see a level, doesn't mean that it's 100% is going to bounce off it. So again, referring back to the trading plan, remember what Alice mentioned about having this certain percentage which you mentally are prepared to lose. Again, this is not to lose it, but to understand that not every single trade is going to go into your direction. But as long as you keep your trading plan and you go along with your trading strategy, you'll be absolutely fine. At least you'll keep what you have invested originally. So obviously, we can have a look at some other examples. I don't know, say euro dollar, the classics. Again, sometimes it might not be that easy to spot those resistance and support levels. But again, it can be something like this. Again, this is easily defined as a support level. Although some of the traders, some of the more experienced ones, they would just say that it's actually a trend channel. But again, it uses basically the same idea as support or resistance. It just basically goes at an angle. So this is absolutely fine as well. Again, if you go to some of the higher time frames, you can notice some bits like this. You can notice, some areas which again, they sometimes they have those breakthroughs. You can probably place another one up here. But again, in the end, what the whole idea about level trading is, you guys see price levels where the market actually stops and reverses. So it basically goes the other direction. And this is again something you can easily apply. At first, you might need to, draw every single one of them to be able to analyze it. But again, later on, the more you do it, the easier it becomes. And, you get better with practice. And at some point, you would actually start to spot them, just with a naked eye. So this is obviously one thing. The other thing to mention, we do have something which is mentioned here as a dollar cost averaging. So this is, I probably would not refer to it as a trading strategy per se. I'd rather say that averaging is basically a technique which is used in those cases where you have opened a transaction which does not go into your direction originally. So what do you actually do? It's probably easier to explain here. What do you actually do is say you sold at this point, and you do hope that you'll probably come to about this level. So what happens is initially it actually goes negative, 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 and probably at this point or this point or this point, you're able to sell again.
It's a short position you're talking about.
Exactly. So the idea is actually not to lock in, for those of you who actually know what that is, but it's actually to add an additional transaction in the exact same direction. So the whole idea is when you come to about this level, you actually have 0. So you don't have a minus on your account anymore, you have a 0. So because this transaction, by the time it reaches this level, would be, say, plus $300, and this one would be, say, 0. Okay, so you guys have already gained something. Again, somewhere in the middle, this one would be minus 150, and this one would be plus 150. So you guys have reached a 0. So this is basically what the average is. So that's why it says average purchase price. Again, this is not only to use when you guys have opened a transaction which obviously doesn't go your way originally, but also you can apply the same method. Sometimes it is referred to as cascading trading. Okay, so what that basically means is, say you opened, let me just quickly place it here. Say you guys sold from this level. Let me just make it a little larger for you. Okay. So you guys have sold from this level, and then you see that it starts going down, down, down. So you obviously, you get higher profit. But instead of closing it down here, what you can do is you can actually add another one, say here, and then it keeps going down. So you can open another one, and then you can open another one, and then you can open another one. But again, don't get too greedy, and it's something that we will be talking about later on, about all of those factors that they can play a really big role in trading from the mental point of view. But basically the whole idea here is that you guys can also use averaging to add additional transactions, even if your first one is actually having profit in it originally. Okay, so this is just a few really quick things about different strategies. Obviously, there is a lot more to talk about, and it's something you guys can really delve on later on. We'll probably get back to the MetaTrader a little bit later as well, just to show a few examples how it actually works. But let's carry on. So, do you want to take this one? Yeah? No? Up to you?
Up to me.
Oh yeah, okay. let me just quickly talk about one of the things I forgot to mention. Good point. Something I mentioned about the first one, so trading levels and opening and closing, how you actually do it. So one of the important things to understand as well, guys, do not be greedy in the sense, do not try to say earn all of it. So if this is your resistance and support levels, do not try to, let me just get this one lower. Do not try to actually get the whole profit out of it. So what I would recommend is, say if you were to buy from around here, so you do open your deals a little earlier. And the reason for that is obviously you can get something like this, which would be absolutely nice if you can get this whole distance. But again, it doesn't always happen. And this is something that I mentioned in the beginning about the perception of where the level should actually be. But also what you can do, you can open your open your transaction a little earlier, and then you can place your take profits, say by here, a little earlier as well. So instead of trying to capture the whole profit, and so one of the oldest jokes in market trade, and trying to earn all of the money, you obviously can't do that. So don't be greedy in that sense. If this is your support and resistance levels, do not try to capture the whole thing again. So open it a little earlier and then close it just before it reaches the opposite side. So if it was a long position, you would probably purchase around here and you would close your deal around this area, okay? Because obviously, you know, you can break through or you can go on the other side. Also, if we talk about breakthroughs, so it does, like I mentioned, does happen. Again, something that some of you guys probably heard about, and for the newcomers to this area of trading, it's something that we're going to have a look into a little later on. Also, you have something which is called pending orders. So it's something you guys can adopt, something you can use. And basically what that means is you guys are able to place those sort of safeguards. So basically what happens is, obviously, say you sold at this point, and then instead of going back to this level, back down, the price actually breaks through this level and starts going up. And it does happen in some occasions, and it's not something you should be absolutely terrified of. It does happen, so something like this can happen. Okay, so one of the things you can do is you can actually place pending orders just a little above it. Okay, just a little above the area which you think would actually bounce the price off. So what you do is, obviously we're not going to go into much detail about it just now, but instead of market execution, we go to, we obviously go to the pending orders, and then you choose the one you need. So it's either buy stop or sell stop if it's actually at the bottom. Same thing, you choose your volume, etc., etc. In terms of the volume, what some of the traders would like to do is obviously place not one, but say double the amount of deals that you actually opened here to sell. And the reason for that is obviously, just a little bump to about this area would be enough to compensate for the initial loss you had in your first transaction that you opened. So again, say we place it at, I don't know, around this area. It's what, say 600. Okay. What do you know? Okay, yeah, something. Let me just quickly check it. Trade levels. Okay, there we go. Yep, something I forgot to do in the settings. So basically, what happens if you guys sell at this point? How about we actually do it? Why not? So we just sell here. Okay. So for you guys to see it. Okay, let's just remove all those things. So we sold just now. Again, you can't see it for some reason. Let's do all of them. Real volume, stick volume. Why do you not see the? Okay. So we sold at this level just now, and again, if it actually goes up to, okay, that's a bit too big. So I want you guys to see how it works. So if it goes through this level, would actually have buy stop, which is basically, it's one of the things to understand. It's absolutely free for us to use. So as long as it's not, oh, there we go. Now we can see it. So as long as it's not activated, it's actually it's worthless to us. It doesn't cost us anything. So as you guys can see it's underneath our balance as well. So once it actually goes through and hits this level, if the price goes to this level, an automated transaction would actually open, which would be our long position. So again, it would compensate for this sell position, which would be in some some minus around this area. So it would have some loss, but again, we'll compensate it with this one, and then we can take it from there. Okay, so this is one of the things to do. Also, in terms of the take profits and stop losses, something most of you guys will probably know by this stage. Again, if you sell from this point, you would place your stop loss above this level. So you'd place it above the closest or the strongest resistance level. So obviously, again, the whole idea behind it is to make sure you guys limit your losses. Yeah, you limit your losses, but again, you want to do it in the manner which is safe to you. So you're not just going all like suicidal and just going for it. You obviously calculate it, and this is again where you have to follow your trading strategy. Okay. Cool. So yeah, that was just quick few tips about level trading and how you guys should place your take profits and stop losses, etc. And this is just a quick take profit that we guys want to place here. Okay, cool.
So next subject to discuss is the major enemies of a trader and main mistakes and how to avoid them while trading. So as you see, they are already written out here: fear, greed, laziness, euphoria, and panic. And I'll say a few sentences about each of them. Greed, for example. For example, when your transaction, you open the transaction and it goes the way you predicted. And you have a take profit level, you put several take profit levels, for example, and you see that the price goes that destination. And then you feel greedy, you want to earn more. And you move your take profit level, and you move it, and then suddenly price falls, and you didn't sell it, you didn't take your profit. So this is what greed about. So of course everybody wants to buy at the lowest level and sell at highest level, but just keep in mind that 80% of profit is almost as good as 100%. So instead of trying to reach all 100% of profit, you just you can take less, but it will be guaranteed. So you just will take profit. You will not be left with the same. Another thing is fear. When market is falling, for example, and you have long positions, and you are feeling fear and decide to save at least something, and you sell your position. This is the best point when big players of the market enter the market. When ordinary people are feeling fear, when ordinary people are afraid and start selling, the big whales of the market, they start buying. So just if you feel fear, that means that this emotion started controlling you. So just keep it in mind. Next thing is laziness. This happens when you have a period when you are constantly successful. Each of your transactions makes profit, and you start thinking that you are already
the king.
The king of the fortune, yes, and so you don't need to learn anything more. You stop reading news, you stop following the market, but just remember that situation can change any moment. So you shouldn't get, you should be quiet, but let's say you shouldn't get relaxed in a bad meaning of this word. So you should control the pulse of the market anyway, even if you are lucky, if you are, there are different periods. You might be lucky for a long period of time, but market can change any minute. So do not let your laziness rule yourself. Next enemy of ours is euphoria. So when market goes up and up and up without corrections, so you feel that again it is what I just told about. It is then you stop controlling the market, you stop controlling your positions at the market, you are sure you are going to earn so much that you have no doubt. Well, it might not happen. Just keep your mind cold and think, be sensible. because if market is going up and up and up, it cannot last forever. Same concerns downtrend. If market is going down, 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 and you are feeling panic, also remember that this not will last forever. So just keep your mind quiet. And one of the most important mistakes of a trader is, as I told already, emotional trading, when you let your emotions control yourself. When you feel stressed, and how to avoid it, and when you feel one of these emotions, when you feel stressed, just don't trade, because not to trade is sometimes better than chaotic trading. Am I right?
Yeah.
I mean, without just to trade something. If you want just to trade something, just don't trade anything, because it will lead you to losses. If you are feeling stressed, just go for a walk, or talk with your friends about some other things, or just play with children, or go to watch a cinema, or whatever. Just don't trade unless you are quiet. And another of widespread mistakes of a trader is not sticking to his trading plan, to his trading strategy. What it means? For example, you opened a long position for a short period of time, for 1 day, for example, or a couple of days, and the price going nicely at the direction you predicted, and all is going nicely, and suddenly you decided to change your strategy, and you decided to keep this asset for a long term. Okay, for short term you already could have taken profit, but as you decided to keep it for long term, you cancelled your take profit levels and keeping. But the price do not go at each destination without retracements. So if you keep an asset for a long term, the price may go down and further down, and in this case, if it happens, that part of deposit will be frozen, let's say. Or if you decide to sell it at lower price, it will be, well, you will have to sell with a loss. And originally you were not planning that. Originally you were planning to trade it within 1 or 2 days and take a little profit and just close the transaction. So, but once you decided in the middle of your way to change your plan, you might face the consequences you were not predicting. So just stick to your plan and keep your mind cold, and keep ability of common sense, let's say.
Yeah, that's true. Cool. So just to quickly say, to sum it up, basically everything that we mentioned today, obviously we can go a lot more into detail about every single part about it. That's why, again, we will have some other videos later on. We will talk some more about it, and you can actually find a lot of this information on our website at the moment. But basically, to understand everything to do, with the fear, with the greed, laziness, euphoria, panic, your trading plan, your trading strategy, all actually comes together. Okay, so you can't say that, it's very important for me to understand the whole mentality, of a trader. If you don't have a trading plan or a trading strategy, it's all gonna fall apart, even if you know it perfectly. Same thing, if you have your trading strategy, but you trade chaotically, then it's not gonna work out either, because you're not following, you're not going with this trading strategy. If you don't have a trading plan, you know, and you just do whatever comes to your mind. You know, you basically, you know, do this when you open and you're like, hey, I'm just gonna sell here. Okay, it doesn't work this way either. So it's something that you guys need to understand. You know, for any one of you who wants to be a successful trader, for any one of you who wants to be able to you know, constantly take profit instead of, you know, the losses. One of the important things to understand. So first of all, do you have your trading strategy? Do you have your trading plan in your mind and follow them at all times? Okay, and this is again something to do with all of these factors, because if you have a strategy, if you have a trading plan, if you keep the record of every single transaction that you do, you can again analyze, you can evaluate your own psychology. You know, you can basically work on your own trading at all the time, and it doesn't matter if you have traded for like 3 years or 5 years or, you know, 10 years. There is always more room to learn and to earn. And you know, so some of the simpler things to remember: do place to take profit and stop losses to make sure you guys, you know, that the deal is actually closed when it should be. You know, do place your, you know, pending orders if you need them. You know, do use the levels. They, you know, they're really good as well, and it's something that you guys should probably practice, especially in the beginning. It would definitely help. So this is basically just to quickly, so to sum it up, to wrap it up a little bit. And like I mentioned, this is our fourth video in terms of this fourth tutorial in terms of the trading marathon, which actually starts on Monday, so in just 2 days time. So for any one of you who wants to participate, you still have an opportunity to do that. So one of the things that you guys want to do is, let me just quickly, okay. So if you guys want to go to, it's lagging a little bit, to this website, you guys would actually find all of the information about the whole trading marathon and how you guys can participate. And it's actually really easy. You guys, all you need to do is just to open an account. You'll find all of the details here, so I'm not going to go into it. And again, something to look out for later on is the Lamborghini Huracan, which is pretty awesome. So for any one of you guys who wants to get all of the bonuses, all of the benefits of this trading marathon, please go ahead and register. You guys still have all the time and all of the opportunity to do that, and we'll stay in touch with you over the course of the whole marathon. So we'll be posting videos every single week, probably even more than one video per week. We'll see. Cool. So this is pretty much it. So one of the reasons I was looking sideways half of the time, we actually do have a live chat here. So if you guys do have any questions just now, feel free to fire them at us. We do have some of the questions that we have gathered over some of the other streaming websites or resources, whatever you call them. And we also have some of the questions that we have been asked so many times over the last week or two. So we have a list of those as well. But let's see if you guys have any fresh questions just now, because I think I spotted a couple of them before. Which currency pair is best to trade? It's hard to say. It
depends on the moment on the market.
Yeah.
Just you watch currencies, keep an eye on most interesting of them, and you just according to the situation in the country, in that in that.
It all depends. It all depends. It also has to do with what do you guys like personally. Yeah, find those instruments that you guys like. Yeah, cool. We're gonna be on the lookout for any new questions. These days, currency news is not stable. Sometimes you heard the US dollar is up in place trade. True. That's yeah. I mean, we're not just talking about currency pairs. There's so many instruments. If you go and register an account, and you actually have a look. There's so many things you guys can trade on. It's absolutely crazy. You guys have all sorts of different stocks and shares. You guys have all sorts of different commodities. You guys have currency pairs. You guys have some really exotic currency pairs. You guys have a lot of cryptocurrency. You have some things like Ethereum versus gold, Ethereum versus I don't know, Dash or Cardano or whatever you guys want. So there is always some movement on the market. The market is just never flat on like across all of the instruments. It's moving somewhere. You just need to find it and execute it. But again, if it's something that basically doesn't go along with your trading strategy, don't do it. Okay. Cool. Will you be explaining how to margin trade? Steve, okay, we actually did a video about it just about a week ago, explaining what margin trading is and how it actually works, because I know a lot of you guys come from the crypto world, so it's something you guys would be able to check out on YouTube, and I think it's on our website somewhere, but you guys can definitely find it online. Difference
Using
between
strategies.
Sorry?
Using strategies.
Yeah.
Don't forget strategies Tony told today, and it will help you a lot.
Cool. Could you explain the difference between short, long term and long term? You published about it on your channel, but not. I think what.
Sure. Yes. I understand what question is about short position and long position and short term and long term.
Okay.
Well, when we talk about short term and long term, that is meaning period of time. Short term, maybe 1 day, 1 week for different assets, and long term maybe 1 year, for example. If we talk about short position, that means selling position. That what is Tony was talking about. I sell at this level and want to rebuy it cheaper. This is short position. And long position, it is when you buy it with the purpose to sell more expensive. So short position and long position, it is not correlated with period of time. So you can open short position for long term, for long period of time. You can open short position for short term, for short period of time, and vice versa. So term, when we use the word term, short term, long term, that means period of time, time frame. And when we use word position, that means your buying or selling position. That means you are a bull or a bear. Let's say your position at the market at the particular asset or with this asset. Is it clear?
Hopefully. That's pretty much it. Okay, came to the webinar. Did you guys hold marathon? Yeah, so like I mentioned, you still have the time to join the marathon. Please do, it's absolutely awesome. It's honestly, I haven't actually heard about anything similar that other companies did, which was so guided so well. So feel free to go online. In terms of which account you need to register, again, something I have shown you guys. Where's the website? Yeah, there we go. So if you guys just go here and you guys go through the open account, etc., etc., you guys would be able to find all of the information here. Again, in terms of the trading marathon, there are news online. So if you go to the main page, if you just scroll down, you guys would be able to find everything about the trading marathon, how it works, the rules, the terms, the duration, the account, etc., etc. But I think one of our admins has already answered that a little bit. Yeah. Okay, which site? There are a lot of them in terms of the live forex news, whatever you choose. Cool. Let's have a look. well, we have all sorts of electric devices around us. Right, let's have a look. Okay, one we get. Do you guys? So, one of the questions: can you get some certificates once we finish the marathon? Okay, so again, it's something you guys can check a little more in detail online. We do have information about that on the
But shortly,
website.
if you want to get a certificate of a trader, yes, you can get it. There are some conditions for that. You should be a verified user. I mean, to pass KYC, your verification. And secondly, your deposit should not be less than 5,000 euros. You should trade not less than 100 positions. And the summary of your trade should be not less than 20% of profit. So if you have all these conditions completed, yes, you will get a certificate of a trader.
You guys can, one of the things we also do, you guys can actually get it shipped by DHL to absolutely any part of the world. So anywhere you go, DHL will find you guys for that. Cool. Can I have an account more than 100 euros, or can I deposit 100 and then add a little more later on? Yeah, absolutely. So you guys can, well, 100 euros, that's basically the minimum to participate, but obviously you guys want to, say you have like 1,000 euros from the start, or like 10,000, 100,000 euros, it's up to you.
Whatever finds your comfortable sum for yourself.
Yeah, so, and obviously same thing, you guys can deposit say 100 euros, and then in a week's time you just, think, I want to add a little more because trading is going so well, let's earn more. Mm-hmm. Yeah, you can do that. So what happens if you withdraw before the marathon finishes? Everything would be okay. You just lose the bonuses that you get originally. But yeah, that's pretty much it. Yeah, you can do it. Okay, another one. Yeah, can I not only trade what you recommend, but also using my own strategy, my own points where to open, close. I want to get higher return. Yeah, sure. So obviously, you guys don't have to follow any of our recommendations in terms of the trading and the predictions and what we'll be doing during the marathon. Feel free. You guys can trade however you want. It just some of the tips that we do share is mostly for the beginners to help to get into it and to understand how it all works. But obviously, if you're a little more experienced, feel free. We're not forcing anyone to do what we tell you guys to do. It's just recommendations. Okay, the same one.
What's going to happen to my account after marathon finishes? Can I continue trading? Yeah, your marathon account will be automatically converted to normal, usual trading account, so you'll be able to trade.
Okay. So, is it? Any other questions? Yeah, we covered that briefly during the webinar. One of the things I've seen here, I think a couple of you guys already asked about a MACD, which is so some of you guys would probably understand moving average, convergence, divergence. So it's kind of hard to cover it in like a couple of minutes, but it's a really good indicator. It's something you guys can all use as well. So basically, what it is, basically allows you to see where you should buy and sell. One of the things I would mention, it's very easy. You guys can find all the information you need how to actually open orders or like place transactions using MACD. There's a ton of information online, and we'll probably cover it later on a little bit. But just a few tips. You guys need to understand that it's not a very quick indicator. So it does not work on, say, like 1 minute, 5 minutes, or 15 and 30. And also do expect any transaction that you open with MACD to work for at least a couple of hours. That's the very minimum. You would not see like any profit within say like first like 15 minutes. It's very rare. But we will not cover MACD just now.
Another question we have here: how we trade different assets on LH Crypto, for example, Bitcoin Gold. We trade it directly. I mean, if you have Bitcoin and if you want to buy gold, usually it should be at least 2 transactions. First, you change Bitcoin to dollars, you sell Bitcoin and get dollars, and then with those dollars you get gold. So you pay commission at least twice. In case of LH Crypto, you can make this transaction directly. Just buy gold for Bitcoins without additional changing to dollars. So you pay commission accordingly once. So this is one of major, I think, pluses.
Yeah, absolutely. So it's basically one of the advantages. You guys don't pay the doubled commission from having to from the initial conversion. Yeah. So the whole idea behind the LH Crypto project, it's exactly the same. So you don't have to convert your say Bitcoin into USD and then trade on Euro USD. You guys don't have to. If you say you have Dash, you don't have to convert your Dash into even like Bitcoin and then have to, if you want to buy, I don't know, say gold, you don't have to trade gold versus US dollar or versus euro. You guys can do it directly. So that's obviously one of the absolute amazing advantages. This is one of the main reasons why this project is so huge, and a lot of different media resources have supported us over the whole course of of the ICO, and everyone's still talking about it. So yeah.
Well, I think 5 more minutes. Or 10
yeah,
more
guys,
minutes.
we probably have 5 more minutes. So let's go for. I don't know, maybe 3 other questions which I find interesting. So is it possible to make, well, we covered that. So it's possible to have a deposit more than 100 euros, or you can add later on. In terms of at the end of the marathon, where we can find trading plans, strategies. One of the cool things, you guys would actually see a rating of different traders that participate in our project. So you will be able not only to go into their trading plans, for the future, the trading strategies that they adopt, but you actually will be able to copy deals. So you'll be able to actually see how they do it, and in some of the cases you can just copy all of their transactions. Again, it's better to obviously learn for yourself, but it's something you guys can easily do. I have my own account. Can I trade on my own account? If that's in terms of the LH Crypto, then absolutely. If it's elsewhere, then obviously no. So that doesn't work like this. Missing bars in the charts. Some symbols have missing days. So it's something which is called gaps. Basically happens when there is a big movement, which happens in just a second. It usually happens over the weekend. Say with currency pairs, you do get it sometimes when say, I don't know, some president election happens over the weekend. Obviously, for any of us, we guys don't see how the banks trade, but they do all the trading over the weekend too. So basically, when we see the next bar, you actually see this massive gap. They can be big, they can be small, doesn't really matter. But there are also cool things you can do with those gaps, how you can trade against them once the market opens. It's something for you guys to learn as well. So yeah, but that's basically why it happens. Again, something that we mentioned previously. This is why it's better to trade intraday. That's one of the reasons. It's not really recommended to go like for really long-term trading if you just starting off. That's basically it.
Because you cannot predict exactly what is going to happen after 1 year. You cannot. The world is changing very quickly.